a real common topic that people ask. One of the thing is they have been unemployed for a while and they couldn't find a job, but at the same time, they realize that they can be self-employed. Now, being self-employed is a whole different beast than just being a payroll employee. So, Mary, can you tell me how I should plan my financial filing as I become self-employed?
Absolutely. We do have clients that walk in the door and they were unemployed for a few months and discover that they have the aspiration of becoming self-employed, and they come in and they have questions and they want to know, in moving forward with their business, how can I protect myself? The first thing that I always advise them is, I want you to understand, when you are an employee, your employer withholds your taxes, the 5 taxes, the federal, the Social Security, the Medicare, the state withholding, and disability. But when you're self-employed, you are responsible for your own taxes. And not only that, you're also responsible for your employer's taxes. So now you're being employee and the employer, you got to pay both of those taxes. So that's number one that you have to watch out. You want to make sure that you paid at least 100% of what you paid before, which is last year. You look at your tax return so that you will not be hit with a penalty. That would be my first advice.
Here's the second thing. Now that I'm self-employed with money coming in, do I just put that in my personal bank account, or there's some extra step I need to take as far as this extra income that comes in?
When you're self-employed, if it's under your personal name, we suggest that you have to file for a fictitious business name. You want to identify or separate yourself from your business as a separate entity. If your business is a sole proprietorship, you should have a business name, file a fictitious business name, and then open a bank account, because you want to separate your business from your personal. So a bank account is always recommended when you are self-employed.
With that understanding here on how to handle my finance, what are some of the key bullet points you can give me as far as bookkeeping, and what's the benefits of having a proper bookkeeping?
To have proper bookkeeping, you need to have a business bank account or multiple bank accounts depending how you want to handle it. There are some people that have bank account for different expenses. For instance, payroll, they might have a separate bank account for payroll only, or they have their bank account in as one general bank account. So it's really a personal preference. The other thing is, you might want to have a credit card for your expenses. A lot of times I see commingling of credit cards between personal, auto, and office expenses. My recommendation for a client is, if you were to have auto expenses, just use one credit card. It's easier to identify. In terms of bookkeeping, you want to make your life, if you can read it, we can read it. If you commingle everything together with bookkeeping, it is hard for you to identify. It's hard for us to identify. And the cost will go up a lot more to do bookkeeping. Always to keep it as simple as possible. Keep all your receipts. The first year, there might be a chance that we will disallow certain expenses because that falls into a personal expense. But the more you do, the easier it's going to get, and the more you will understand how bookkeeping works. It's also very important to have bookkeeping available when you are applying for a small business loan. Lenders will not give you a loan without financial statements, and that is your income statement and your balance sheet. A lot of people, they understand the income statement part, which is your income and your costs and your operating expenses. However, they need to see both sides of the coin. They need to see the health of your company. They need to have the balance sheet. And the reason why the balance sheet is important is because they need to look at cash flow. They need to look at your cash account, your accounts receivable, your liability. What if you have a lot of outstanding loans the income statement cannot see? Having a balance sheet is just as important as the income statement. Having bookkeeping, you will have both sides, the balance sheet and the income statement, which is a complete financial statement when you apply for the loan. Coming to Exact Tax to file your taxes, not only do we just plug in your number and just say, here's your bottom line, whether you have to pay taxes or whether you're getting a refund. But we look at your overall picture and we want to identify, are there areas that we can look into where you can save your taxes? The number one thing is if I have a new client, I always go through the whole tax return with them. I educate them. What a tax return, what is a 1040? What does a 1040 mean to you? Because we can identify all the income, we can identify if there's any adjusted gross income. Then we go through whether can you itemize, can you not itemize, why you can itemize, why you cannot. Because there's some instance where if you were to do it on your own, you might not think that you qualify to itemize, and you do it as a standard deduction, so you lose out. With Exact Tax, we will look at every single category to see if you qualify for extra deductions. That sets us apart. You can go to TurboTax. TurboTax will navigate you to tell you exactly where you should go. We have people that come to our office because it navigated wrong, where they will receive a letter from IRS and they receive a letter of a CP 2000, which is a automatic audit letter from IRS. And in comparison, what they produce, something is wrong with their tax return. And a lot of times is because the navigation part of the tax return was wrong and you misread it. So having a live person to do your tax return like Exact Tax, we can actually help you identify areas that you can take additional deductions.
Sounds like coming to Exact Tax, not everyone fit into the same mold.
Not at all. Because let's say your income is $50,000, you contribute to a 401k, but you can still do an IRA. Where if you go through automated computer system where you navigate, it's not going to tell you this information. There's tax laws that can apply to you, even though it might say you already have a 401k, but you actually can additional contribute to an IRA to reduce your tax liability.